A new currency war, marked by rising gold prices, is just the beginning. Have you ever wondered how you could buy a house in Mexico worth $1 million with only $900,000? One straightforward approach is to hold on to your dollars and wait for the Mexican peso to depreciate against the dollar. In recent years, as U.S. interest rates rose, capital flowed into the U.S., causing many currencies, including the Mexican peso, to lose value. So, if you wait a few years, the peso might weaken, allowing your $900,000 to buy more pesos, enough to purchase a house previously valued at $1 million. For example, if a house costs 20 million pesos and the exchange rate is 20 pesos per dollar, it would be worth $1 million. But if the peso depreciates to 22.22 pesos per dollar, your $900,000 could buy 20 million pesos, sufficient to own that house. This is a smokeless currency war. I don't need to threaten you with force, but your assets will effectively be sold to me at a discount if you believe the U.S. Federal Reserve, Fed, has stopped raising interest rates and is now cutting them, thinking the currency war is over and the chance to buy property cheaply is gone. In reality, a new phase of the currency war has quietly begun. If global capitalists are stockpiling gold and you remain indifferent to it, it's fair to say you'll stay poor, or at least never become wealthy. What does this mean? Greetings, dear friends. If you're someone who wants to earn more money or simply protect your assets, you must pay attention to the Fed's movements. But for professional investors like us, we focus on the Bank of Canada. Why? Look at this chart, it's simple. The blue line represents the Bank of Canada's assets, and the gray line is the Fed's. During the 2008 financial crisis, Canada's blue line rose earlier and faster than the Fed's gray line, meaning Canada expanded its balance sheet sooner and pumped more money than the US did, even in 2020. When Canada started unlimited money printing, the Fed followed suit. Last year, when the Fed began adjusting its policies, Canada was already 2 months ahead. So, what can we conclude? Whether it's expanding the balance sheet or tweaking policies, Canada often leads the US. This makes sense in a war. If you're the leader, would you charge in first? Maybe in movies, but not in reality. If you rush in and fail, it's game over, so you let your subordinates test the waters before deciding to act. Imagine if the US were the first to cut interest rates and made a mistake, markets would panic instantly. That's why Canada acts like a puppet for the US. The vanguard moves first, giving the U.S. a country to experiment with the market, and that's Canada's role. Here's the issue: Canada has now announced that next month, they'll start expanding their balance sheet and injecting money into the market. They're gearing up to act. So, does this mean the Fed is about to follow? Every time the Fed expands its balance sheet and pumps money, gold prices skyrocket. For instance, in 2008, when the Fed injected money, gold prices doubled. By 2020, after another round, gold nearly doubled again compared to before. This means that if we can invest in gold before the Fed acts, our assets could have a chance to double when it happens. But how do you invest properly? In fact, the explosion of gold prices marks a new round of this smokeless currency war. Ordinary people's assets don't just stagnate after the Fed stops raising rates, they lose value faster. Why? If you don't want to be a pawn in this war, or if you want to seize the opportunity to grow your wealth and change your economic status, follow my channel. I'll keep providing you with useful information. If you're worried you'll forget the content after listening and think it's a waste of time, just like this video, it'll automatically save to your playlist so you can review it anytime. First, if you don't live in the US and aren't actively following news, you might not know that a month ago, I mentioned 7 US states had passed laws allowing gold to be used as currency again. Now, that number has surged to 47 states. In other words, for Americans today, both gold and dollars can be used to buy goods without necessarily relying on dollars anymore. What does this mean? As noted, if the Fed is about to expand its balance sheet and pump money, the dollar will lose value immediately. But if the US government can get people to convert dollars to gold beforehand, then when the dollar depreciates, their assets won't shrink as drastically. However, this is just a surface goal. The key thing to remember is that both dollars and gold are now considered currencies, so why has gold's price spiked so much recently? Because the US is set to impose import duties on gold. What does that mean? Suppose I'm a gold trader. Right now, when I sell gold to the US, I only pay $100,000 in import taxes. But if the tax jumps next month, I might have to pay $300,000, meaning my gold business costs will rise. To maintain my profit, I'd have to sell gold at a higher price. So, if I know the tax will increase next month, shouldn't I try to import as much gold as possible this month? That way, I'd still pay the old tax rate of $100,000 instead of $300,000 after the hike. In short, importing gold now saves me the added cost of the new rate. That's why people are buying gold in the UK and frantically shipping it to the US. Gold bars and blocks sold in the UK are nearly sold out. This is why gold prices have soared lately. It's truly a new round of the currency war. What does this imply? Do you think rising gold prices are good or bad for the US? Which country in the world has the largest gold reserves? Isn't it the US? In past wars, the US sold weapons and collected vast amounts of gold. Then they established the gold standard, declaring to the world, "Give me your gold, and I'll give you dollars. From now on, you can trade with dollars. If you want your gold back, just bring dollars to exchange." In other words, dollars were once convertible to gold at the exchange. That was the gold standard. However, later, the US claimed that since too few people came to exchange gold, and most used dollars for trading because gold was inconvenient, they abolished the gold standard. This meant no one could swap dollars for gold at the exchange anymore. So, the US used its printed money to gather gold from around the globe. Today, the US holds over 8,000 tons of gold, more than any other country. The total gold in the US exceeds the combined reserves of the second, third, and fourth-ranked nations, and that's just what the US owns. Plus, as mentioned, many countries store their gold with the federal. For example, Germany keeps half its gold there but can't withdraw it. Germany once asked to check its gold deposits in the US but was denied. This means that beyond the gold the US owns, a huge amount from other countries is held there and can't be retrieved. In total, the US controls up to 15,000 tons of gold, all under the Fed's authority. So, when gold prices rise, who benefits the most? If you check the Fed's balance sheet, you'll see their gold reserves, recorded over 40 years ago, are still valued at $111 billion. But now, those 8,000 tons are worth at least $8,100 billion, and that doesn't include gold deposited by other nations. Yet, on the Fed's books, they still list just $1,101 billion, meaning the real value is undervalued by 70 times. What does this mean? It means the Fed has deliberately hidden its true worth until now. They do this by making the world believe their most critical asset isn't gold but US Treasury bonds. Why? Because the world follows the Fed's investment lead. If the Fed pumps money into US bonds, bond prices rise, prompting global investors to pour money into them too. Buying US bonds requires dollars, so dollar demand increases, keeping people convinced dollars are the safest asset. But here's the current problem: US bonds are getting harder to sell. People no longer want to lend to the US because they're doubting America's ability to repay its debts. At this moment, gold, an undervalued asset, could become a secret weapon. For example, say I wanted to borrow $10,000 from you, but you thought I couldn't repay, so you refused. But then you found out I have a family heirloom worth $1 million, turns out I'm secretly rich. Would you reconsider lending to me? Similarly, in recent years, every time the Fed expanded its balance sheet and pumped money, the world thought America was acting recklessly. The US now owes $36 trillion, but 80% of that is because America printed money and borrowed from itself to spend. So, the real debt America owes the world is only about $7 trillion. If we piece all this together, we'll see an incredible picture. Now, follow my reasoning again. Of America's 50 states, 47 have declared dollars and gold as legal tender. This means the US is starting to place gold on par with the dollar. Is this preparation for the US to tie its currency to gold again? Next, the US announced it'll impose tariffs on gold, so gold from around the world is being shipped to the US at full speed. Is the US's gold stock growing daily? Meanwhile, many forget that the US holds the world's largest gold reserves. Finally, gold prices are skyrocketing now. Do you see what's happening? If the US restores the gold standard and announces it'll use gold as collateral to issue dollars, what would happen? Right now, people use dollars and lend to the US via government bonds because they trust America's reputation. But when that trust wavers, when countries speed up de-dollarization and stop buying US bonds, what then? If the US ties gold to the dollar and its bonds, the world might lose faith in the dollar, but can they lose faith in gold? The US was once the world's top gold holder, and now, with even more, it'll tell the world, feel secure using dollars and buying US bonds because even if I can't pay my debts, I have gold to mortgage. Thus, gold prices surged when the US amassed the most gold. If the US lacks spending money, it can use gold as collateral to borrow more globally. One day, it might even issue dollars directly with gold and officially restore the gold standard. As long as the US holds gold, it can keep printing money. If the US prints $1 trillion through banking leverage, that could multiply into $10 trillion for spending. And since each new dollar is backed by gold, people will believe this currency has real value. Simply put, the US is telling the world a story: because I hold gold, dollars and US bonds have value, they won't become worthless paper. Do you see how America is making a bold move, turning danger into opportunity, luring the world into its trap? Right now, the world is rushing to buy gold instead of US bonds, but if both are in America's hands, the outcome won't change. Last year, when we started buying gold, it entered a price surge cycle. The key reason? US bonds had hit a bear market. Why? Until now, countries trading with America, especially China, would earn dollars from sales and hold them without spending right away. But dollars keep losing value due to the Fed's money printing. So, China and others often bought long-term US bonds to earn interest, preserving currency value and staying liquid for when they needed dollars. But when the debt crisis hit, a big event changed things: the US froze Russia's overseas assets. Imagine spending a fortune on a house you can't live in or rent out. You own it but can't use it. That's frustrating. Maybe that's why China started cutting its US bond holdings. However, this reduction doesn't mean China is dumping US bonds on the market. When bonds mature, they just don't reinvest in new US bonds. In other words, China once lent to the US, but when the US repaid the principal, China stopped lending again. After recovering this money, China kept buying gold and storing it in its central bank's vaults, ensuring no one could seize or freeze their assets. Meanwhile, US rate hikes crashed bond prices, causing many US banks to collapse. These banks had bought heaps of US bonds, often using leverage to boost profits, but when bond prices fell, their asset values tanked. Selling meant heavy losses, holding meant liquidity issues, leading to bankruptcy. Not just China, Japan and the UK also slashed US bond holdings last year and shifted to gold. For main groups buy gold. First, industrial firms use it for production. Second, people buy it for jewelry or luxury goods. These two don't sway gold prices much. The critical groups are the third and fourth: central banks and investors. Central banks buy gold based on national policy, hoarding it long-term without selling. Investors see central banks mass selling US bonds for gold and follow suit. So, lately, US bonds have plunged, and gold has spiked. But this is just the start. As mentioned, if gold becomes currency and the US keeps pushing its price up, it'll spark a new currency war. Even if the US doesn't raise rates or the world doesn't lend to it, global money will still flow to America. Why? Look at recent reality. As gold prices rose, people rushed to buy bars and bullion to join the market. That's no different from using their local currency to buy gold, while many gold ETFs and futures trade in dollars, causing global currencies to be sold off and keep depreciating. When the US raised rates, currencies like the Japanese yen and South Korean won crashed. Some nations, like Egypt, Argentina, and Brazil, even saw their local currencies collapse. Now, though the US has stopped raising rates, gold keeps climbing, pressuring other currencies to depreciate further. In the past, the US used rates to pull global money into its banks or short-term bonds, hammering other countries' exchange rates. Now, even with lower rates, they can use gold's rise to pressure those rates again. Add Trump's tariff policy, making exports to the US costlier, and most countries have no choice but to devalue their currencies. This keeps their goods cheap, offsetting tariffs and preserving export orders. But it also means their currencies keep losing value. As an investor, watching your country's currency steadily depreciate, your assets shrinking and forced to sell cheaply to the US, what would you do? Even as an ordinary citizen, you'd see imports getting pricier and living costs soaring. In that case, would you consider moving assets to the US or safe channels like gold, dollars, or US bonds? Especially for businesses borrowing in dollars, say a Mexican firm borrows $1 million, converting to 20 million pesos. If the peso depreciates after a year, those 20 million pesos might only fetch $800,000, but they still owe the full $1 million plus interest. Unable to pay, the business goes bust. And their collateral, stocks or real estate, goes to the lender. Take the 1997 Asian financial crisis. Thailand owed over $90 billion, but hedge funds shorted the baht, crashing its value. Thailand burned through dollar reserves to intervene, but the debt was too big to handle in time. The crisis erupted, wiping out decades of Thai wealth overnight. When assets hit rock bottom, US capitalists swooped in with strong dollars to buy them cheap. It wasn't just Thailand, Japan and South Korea faced the same fate. If the Fed keeps expanding its balance sheet and printing money, global currencies will keep depreciating. If trade and currency wars head this way, gold could become the world's safest asset with the strongest growth potential. That's why more of the world's wealthy are stockpiling gold. Those who don't own gold or allocate assets to it during this time might lose wealth invisibly. Beyond physical gold, like bars or coins, ordinary folks can still profit from gold's rise through my personal ETF fund. Whenever I make a profit, I periodically buy physical gold and store it, never selling. To me, gold is the ultimate safe haven and a true currency. If gold hits a strong uptrend and I want to profit, I'll trade gold futures. For beginners, a simpler option is investing in gold ETFs like GLD or IAU, big, popular funds. I'm not advertising, I'm just saying these ETFs are priced in dollars, so you need to convert your money to dollars first. The prerequisite is believing your currency will lose value while dollars and gold gain. If you're convinced, consider these ETFs. The key is understanding when to buy and sell with low risk, how to weigh profit versus risk, and the criteria for picking assets and stocks. Investing can't just rely on emotions without clear standards or conditions. Right now, gold has risen a lot, and there's a correction risk. Jumping in now could trap your capital. You might buy, and prices drop right away, or even if they rise later, they could crash again. All this follows its own rules and systems. Currently, the Fed has paused rate cuts, and the stock market swings without a clear trend. So, what's next? How should we invest? Due to time limits, I'll stop the video here. I share free knowledge on getting rich, investing, and achieving financial freedom. If you don't want to miss out, follow my channel, turn on notifications, and share this video with more people than I can reach. I wish you all financial freedom soon. If you find even one or two useful sentences in what I share to improve your life, I'll feel satisfied.